3, 2, 1. Good morning, SMF MMTs. Today's date, 12/5/2010. Trading's tomorrow on Monday. This is the weekly analysis. Now, I do show you the daily, but we get into the weekly because basically you can trade the VXN. You can buy calls and puts on it. You can buy bear funds that move in the same direction. You can short bull funds at the same time that go down in the opposite direction. So by understanding the key core elements, whether it's the fear indicator here, this is equal to the Nasdaq 100. It's also equal to the broader Nasdaq comp. Basically, it will tell us where the public is as far as what their sentiment is, their complacency, and one of the things that MMTs learn very well, when you break out here, stock market sold off hard. When this same indicator reverses and goes down, you had big rallies in the market as well. And so far, once we made this interim high in April of 2010, and for new MMTs and new people, you go find the videos. We called that big reversal that was going to happen down here. And there's a lot of money to be made just understanding how to apply the weekly, the daily, weekly, monthly, on a shorter term, on an intraday level is more in the 3, 5, 15, and 60-minute levels as far as directional price movement within equities per se themselves. And when this is very weak going down, equities are breaking out. Now, I've already went in and I populated everything in the brain. Basically, where we're at is we're about 19.77. And in our system, that's either we're going to go up in delta prices mathematically. These are the SMF pricing model system relative to the public print. And we are accurate. These lines were just populated. This is how this is going to trade. It's going to be $1.60 wide and directional movements up or down. What I am going to say is that on this particular week right here, I'm going to show you, I'm going to take the brain down for a moment. That bar is 2132. That's this bar. That's half of that SMF Pro Action bar. Now, if I stay below it and go down to these other support levels, these are various mathematical support levels, but we tested here and we have this breakout right here on 11.8. And when we broke higher off of that bottom, we broke up, we continued to break hard, we pulled back, and then we had this big pullback back to that delta line support. That's the SMF pricing line, 100% accurate. It calculates it all. Forward-looking, backward-looking doesn't matter. What I will tell you in here is the gift of understanding that if I stay below, if I break out up to 2132, and I stay below 2132 and I break down, that means that the current trend, December 1, 2, and 3, that people have gotten bullish, they're also going to become more complacent. So think of this chart as a fear chart and a complacency chart, and think about that the lower that it gets, generally everyone is all in the move. And when they're all in up at the top, that's where individual indexes have a hard time breaking through their resistance levels. And when they don't break through their resistance levels, when this moves higher, like this, markets sell off tremendously. We've had a great trend ever since this reversal all the way back down here. And we're setting in a bottom. The key is this delta line support right here. If that holds and I break above there, that means that the indexes, individual equity prices during the intraday price action range will go up to their individual resistance levels, and they'll roll right over. So you know you're going to be selling short the name. And that the momentum of the actual intraday trend, that stock prices will not be breaking through resistance levels, but rather selling off into resistance in individual names like Baidu, Google, Apple. I can go on and on. Netflix. How many more you want me to say? Goldman Sachs. Okay, I've said it. Now, the thing about it is how do I take the VXN? You can buy calls, puts. You can buy bear funds. So if this thing breaks out, you want to be long ETF bears. We know exactly which ones that are related to the Nasdaq 100 stocks and the Nasdaq comp. Nasdaq comp, they have a 100 index, folks, MMTs. And the leadership of that index, when they don't perform and if they sell off and we break higher, we start to break higher, those leaders are going to sell into resistance. So if this rally is going to continue, we're going to drop down somewhere here in the month of December. And if we hold higher price delta action in the SMF mathematical market maker pricing system, we're going to understand where we're going to apply our short-term entries and exits as far as directional price breakouts or directional price breakdowns, MMTs. So when we start out 12.6, we're going to be looking exactly when this thing is going higher intraday on a 3-minute and a 15-minute, that means that stocks are going to sell out. So we're going to see if we start to build a weekly base here. We're also going to see that when we came over here, this has happened, this bar right here. This weekly bar was on 830. That's where we went straight down. That's when we were going long in September and October. How far it would go, no one knew. But you can see the reversal here where the September and October rally all the way up into November happened. When this corrected, when this went down in September and October, we had a 71-year phenomenal event that happened that we rallied into that month of September and October of 2010. That went down and equities broke higher. Now we broke out and we broke back down and we rallied December 1, 2, and 3. It's going to be very important as to what kind of a basing pattern that this fear indicator and complacency indicator sets up at the price action. It's going to determine the bear and bull trade setups that the SMF MMT platforms will use in their trading application. And it's a direct access trading application. It prices its own stock market. It's got its own pricing system that's accurate. And all of the mathematical ratios, everything in the brain is going to tell you tomorrow morning, MMTs, what's going to happen on the beginning of the trading day. And we cover that in pre-market futures. We will tell you what's going to happen. But everything that you're taught in the ratio pattern equals dollar price movements, they're accurate to a T. They're the wonderful thing. And what I'm saying, MMTs, the lower that we go, if we come back down here and test the lower bottoms, that means that the December rally would continue. But however, if the December rally, if this fear indicator, this VXN starts to build and break higher, that means that the market at major resistance levels in all indexes, it would be S&P 500, S&P 100, it'll be the Nasdaq comp, it'll be the Nasdaq 100, it'll be the Dow Jones. It will be those very key indexes that if we're going to continue the rally, it's got to go down. But if we start to break higher back up, here's half of the bar, 2132. If I'm closing above that mathematical number, and that's what you need to put down in your MMT alerts on your direct access platform, put the alert rises to 2132. That's what you do, Bill, Rachel, and new MMTs that are on the using the brain. That's exactly what you'll do. You'll use every one of these mathematical equations as to your alert equations, okay? So basically, we went up 1, 2, 3 deltas high, slightly 3 deltas high. So that's $1.60. So when we came back down, we broke out in the first week. We're starting the second week of September. If I gap up on this thing and start to consolidate at a higher price, the indexes are weak. Price action at resistance is to be sold short. Bear funds are to be bought off the bottom. The bull TQQQ would be going up to resistance. It would be selling off. It would require a short entry at that time. MMTs.